While the spotlight shines on tech and energy giants, one sub-$2 uranium stock is quietly gearing up for a breakout: Denison Mines, trading under the ticker DNN. As uranium prices climb and nuclear energy returns to the global spotlight, Denison Mines, a Canadian small-cap uranium developer, is gaining serious traction. With real assets, a disruptive mining approach, and growing investor interest, DNN could be one of the most compelling undervalued plays in the uranium space right now. In this video, we'll explore why DNN might be the best uranium stock under $2, how its flagship Wheeler River project and cutting-edge ISR mining strategy could unlock massive upside, and why the timing couldn't be better. Denison Mines Corp is no newcomer. It's been in the uranium space since 1960. The company is focused on high-grade uranium assets in Canada's Athabasca Basin, particularly the Wheeler River project, home to two significant deposits, Phoenix and Griffin. What makes Denison stand out is its use of in-situ recovery mining technology. Unlike traditional mining, ISR involves injecting a solution underground to dissolve uranium and pumping it to the surface. This method slashes upfront costs and environmental impact. Denison's Phoenix deposit, in particular, is set to become one of the lowest-cost ISR operations in the world, with operating expenses projected around $8.50 per pound of triuranium octoxide, a figure that puts it at the top of the global efficiency curve. With 90% ownership in Wheeler River, Denison has secured a strong stake in what could be a game-changing uranium development. Add to that progress on federal permits and environmental assessments, and the company is well-positioned to move forward when the time is right. The uranium market is heating up fast. Demand is soaring in 2025 as countries double down on clean energy and nuclear power gains renewed political support. Governments around the world are restarting reactors, extending licenses, and greenlighting new builds. From Asia to Europe and North America, nuclear is once again being seen as a critical piece of the energy puzzle. Uranium prices reflect this renewed interest. After hitting 14-year highs near $82 per pound in early 2024, prices have remained strong in the $70 to $78 per pound range. Analysts expect a further rally to $90 to $100 per pound by mid-2025, driven by demand outpacing supply and policy shifts, like the U.S. ban on Russian uranium imports. This environment is a tailwind for uranium developers like Denison. With its ISR approach and advanced stage project, DNN is one of the few juniors positioned to benefit meaningfully from the surge in uranium prices. At around $1.81 per share, DNN offers something rare: access to a high-potential uranium play without the high price tag. This low entry point makes it appealing to both retail traders looking for volatility and long-term investors seeking asymmetric returns. Liquidity has also surged. On a recent trading day, DNN saw 116 million shares change hands, 149% above average volume. That level of activity signals rising interest and provides investors with easy entry and exit points, an underrated benefit in small-cap investing. Valuation-wise, Denison still trades at a steep discount to peers. While its market cap is about $1.6 billion, players like Cameco hover around $32 billion, NextGen around $4.6 billion, and Uranium Energy Corp near $3 billion. With DNN still under $2, the upside becomes even more compelling if its Phoenix ISR project executes as planned. Denison's crown jewel is the Wheeler River project, home to two rich uranium deposits, Phoenix and Griffin. Phoenix is especially promising, with over 56 million pounds U3O at a staggering 46% average grade, and a feasibility study valuing the asset at over $2.3 billion pre-tax. Using ISR, Phoenix could begin production with just $420 million in upfront capital and a 10-month payback period, metrics almost unheard of in the mining world. Regulatory momentum is also strong, with Denison advancing federal licensing and environmental approvals to greenlight construction. The bottom line? Denison has both depth and breadth in its asset base, giving it leverage across multiple timelines and market cycles. Wall Street is starting to take note. According to TickerNerd, DNN has a median price target of $4.38, with a high-end estimate of $6, representing a 140% to 230% upside from current levels. Fintel places the 12-month target at $2.89, still offering a solid 60% gain. Top institutions are bullish too. Cantor Fitzgerald upgraded its price target to $6 in early 2024, naming DNN one of its top uranium picks and assigning it a 1.5x NAV valuation. Social sentiment mirrors this confidence, with many retail investors labeling DNN as a sleeper winner in the sector. Financially, Denison is well equipped for growth. The company is debt-free, has 121 million Canadian dollar in cash, and holds around 2.2 million pounds of uranium, worth nearly $180 million. This robust balance sheet gives it the runway to fund ISR development without immediate dilution, another major plus for shareholders. Of course, no investment is without risks. Denison still faces regulatory uncertainty. ISR mining requires intensive oversight, and any delay in approvals for Phoenix could push back timelines and increase holding costs. Another concern is uranium price volatility. Despite strong recent performance, prices remain susceptible to shifts in geopolitics or changes in nuclear policy. A drop to $50 to $60 per pound could strain the economics of new projects. Additionally, Denison's smaller scale compared to giants like Cameco means it has less room to absorb delays or cost overruns. While the company is cash-rich today, any major expansion could require future equity raises, posing a short-term risk of dilution. Still, for investors comfortable with the risk-reward profile, DNN offers rare exposure to one of the lowest-cost upcoming ISR projects in the world. If Denison brings Phoenix online as planned, it could set a new benchmark for ISR uranium mining. With ultra-low operating costs, a fast payback, and sky-high grades, this project could significantly boost Denison's valuation and take its stock far above current levels. Simultaneously, uranium's macro picture keeps getting brighter. Spot prices have been holding above $75 per pound, supply remains tight, and utilities are scrambling to secure long-term contracts. Geopolitical shifts, like sanctions on Russian supply, make domestic sources like Denison even more attractive. In short, the stars may be aligning for Denison Mines. A successful rollout of Phoenix, continued price strength, and favorable policy changes could fuel a massive re-rating for DNN stock. Denison Mines isn't just another penny stock, it's a serious player with real assets, a disruptive ISR approach, and momentum that aligns perfectly with the broader uranium bull case. At under $2, it presents a rare opportunity to get in early on a project that could redefine low-cost uranium mining. So what do you think? Is DNN a high upside bargain or a speculative play with risks too big to ignore? Let us know your thoughts in the comments below, and don't forget to like, subscribe, and hit the bell for more deep dives into undervalued stocks like this, only on Stocks Telegraph.